Hi, everyone. So if everyone would like to come in and take a seat. I know this is the session that all of you struggled all the way from across the world to get here in all this terrible weather we've been having. You've been anticipating this announcement for a really long time. So I'm very happy to welcome Mark Priebe and Amy Bales, who are going to discuss the new Foreign School Audit Guide.
You applaud now, but it may change to boos later, right? So I'm going to do the first few slides. Amy's going to do most of the heavy lift in today's presentation with all the new regulations, audit guides, and steps. Can't hear. All right. Is that better? Okay. I'll try to talk more into it. Okay, so the first here, we just have some abbreviations that you'll see in the audit guide and throughout this presentation, just kind of give you the definitions of those. And these slides will be provided to you after, or if not already, on the FSA training conference website. So I know I've seen some people taking pictures, but you do have copies of all the slides. So what we'll cover today, real quick, we'll do the introduction and background. We're going to talk about the changes made to the Foreign School Audit Guide, to the general requirements, the financial statement audit, the compliance engagement, and then the report package. I also wanted to add that we sent the audit guide to the AICPA in hopes that we would get some feedback from some audit firms that do foreign school audits. We were surprised to not really get too many comments back. I think they were able to get some from one firm. So we are looking for volunteers from firms, or if you're a school that you could convince your audit firm to potentially volunteer to review the guide and offer us some comments and feedback. Come see us after, or Amy will touch on it a little bit more in the slides. And there's contact information that you can provide them in order to reach out to us, and we'd be happy to share the guide and get some more comments on that. What the Non-Federal Audit Team does, we assure the quality and usefulness of the non-federal audit process. We ensure that the non-federal audits meet requirements and are reliable and effective tools to improve the integrity and effectiveness of ed programs. We oversee the QCR process. We provide technical assistance. We issue audit guides. We participate in compliance supplement revision process. We participate in the post-audit activities. We represent ed at interagency meetings related to government-wide audit issues. So as a reminder of the general audit requirements for foreign schools, the Higher Education Act of 1965 is amended. The HEA requires annual financial and compliance audits for all schools that participate in ED student financial assistance programs under the Title IV of HEA, which is in the guidance is 20 USC, subsection 1094, and the 34 CFR 668.23. The audits must be performed in accordance with government auditing standards, sometimes called the Yellow Book, and audit guides developed by OIG. So that brings us to why we are here today, and Amy's going to take over from here and explain all the fun changes.
Very fun changes. Can you hear me? Is this close enough? Okay. Okay, we're close. I was here 2 years ago, and I said we were close, but this time, I mean, we're like really close to issuing this audit guide. So while you're all here today, we'll take a little time and talk about the changes that are coming and what that means to you. Like Mark said, we have several stages of review for the audit guide. First, internal within OIG, and then FSA gets to look at it, provide comments, OPE, OGC. Everyone looks at it, and then we try to go external and get comments. Well, as Mark said, we got very few, so we're looking to give some more audit firms a chance to comment on that. And so if your auditor is interested in doing that, they can send us an email, and our team email is on one of the last slides of this presentation. reach out to us and we can provide the guide to them if they want to provide some comments. The only thing is that we're asking for comments by the end of the year, by the end of this month, so that we can keep on track with our timelines for issuance. So, like I said, we're in the very final stages. Any changes that I discussed today is not completely final, but pretty close. This isn't going to be a full list of all the changes, so you don't rely just on this presentation for your auditors. They'll need to do a detailed review of this, but you know, with 18 years in between guides, there's a significant number. So those are the disclaimers. Let's talk about it. We're hoping to issue this guide in early next year, early 2020. We had anticipated when we did these slides that we would have an effective date, fiscal years beginning on or after July 1, 2019. So that was the fiscal year end 6/30/2020 audit reports would be done in accordance with this guide. We are most likely, though, going to push that back 6 months. So it would be the 12/31/2020 fiscal year end audits that would be first subject to this guide. And that's because some auditing standards have recently come out and they're not effective until late next year. So if we were to issue and make the effective date 6/30, we'd have to issue an update in 6 months. So this guide does not allow for early implementation because we use the 2018 version of the Yellow Book, the Government Auditing Standards, which do not allow for early implementation either. So whatever our effective date is will be what it is, and you won't be able to early implement using the guide. Once it is issued, we're going to post it on our website, and there's a link to our website there. It'll have the guide. It'll have any other resources available related to the guide there. So your auditor should be checking this site, especially before starting your audit every year, and you guys might want to peek in there every once in a while as well to see what's out there. And then we're going to work with FSA to push some sort of announcement out once it is issued to you guys so that you're aware that it's out there. First, going over a few things that did not change. Starting off, all 3 types of engagements that are discussed remain at the same level. So it's still a financial statement audit. The standard compliance engagement is still an examination level attestation engagement, and the alternative engagement is still an agreed upon procedures engagement. So those last 2 are performed in accordance with attestation standards applicable to those types of engagements. Probably doesn't mean much to you guys, but to your auditors, they'll be interested in that. On reporting noncompliance, it's still the requirement that your auditor reports all noncompliance that they identified during their audit as a finding in the audit report. That hasn't changed. And then although they're required to report all noncompliance, material or not, they still have to consider materiality for the purposes of providing an opinion on compliance. So they still have to consider materiality for for each type of compliance requirement. So they'll be defining materiality for institutional eligibility different than they would for student eligibility. What is a material finding in those areas? And then they're still going to be following up on prior findings. That didn't change. That's an auditing and attestation standard that they're required to do. So they have to evaluate what your prior findings were, whether you've taken corrective action, and how that might impact their current year audit. So of course we had to update statutory and regulatory changes that were effective since 2002. So we've done that, and this is kind of a summary of what those are. These are, changes that have happened in 2010, 2011. These are all things that you've been complying with, but we just have been late issuing, updating the guide with. Of course, there was the change from FEL to direct loans. That's addressed. And then as of July 1, 2011, Education had exercised its authority to waive or modify some audit submission requirements. That included the financial statement audit requirements are dependent on the type of school and the level of funding. It allows for an alternative compliance engagement based on the level of funding. And then it also allows for a 3-year cumulative audit, compliance audit, if certain requirements are met and if you're notified that you're eligible for that. It's my understanding, though, that currently the department's not notifying schools, they're not using that, they're not notifying schools that they're eligible for the 3-year cumulative engagement yet, but that could be something that they choose to do in the future. And although they've exercised their authority to waive or modify some of these requirements, they also have the authority to require a foreign institution to submit financial statements in a manner specified if they find problems with the financial condition, and to have a compliance audit performed at a higher level if they identify administrative capability problems. Of course, we've also updated the guide for changes in actual compliance requirements since 2002. I'm not going to go through those in detail, though. I'll point out where we're newly auditing certain areas throughout the presentation. We also took into account things like last November's Federal Register notice that identified certain consumer information requirements that do not apply to foreign schools. So there's a lot of things that we took into account when updating this guide. So of course we've also updated all professional standard citations to current versions, so we're using all clarified auditing and attestation standards. And I mentioned before that we're using the July 2018 revision of the government auditing standards that for our purposes isn't effective until next year. And so again, that's why there's no early implementation of this audit guide. And then another change is that the audit or attestation procedures throughout the guide are now presumptively mandatory rather than suggested. And what that means is they're identified by a should statement. Your auditor should perform this procedure. And that means it has to be performed where relevant, unless in rare cases where performing the requirement would be ineffective in achieving the intent of the requirement. If that was the case where performing the procedure as stated doesn't work, your auditor would have to perform an alternative procedure to meet that objective. So the guide's broken up into chapters now. Chapter 1 are general requirements that apply throughout. Chapter 2 is the financial statement audit. 3 is the standard compliance engagement, and 4 is the alternative engagement. So we'll kind of go through the changes to each section. So first of all, we had updated the instructions for submitting the audit reports to align with last year, or I guess earlier this year's electronic announcement allowing for email submissions of foreign school audits. Currently there's a little footnote in there that says easy audit is coming, and watch out for that and follow whatever requirement that is. We might be able to get with Ty before we actually issue this and give some more instruction for easy audit, because we know that that's coming now, but follow whatever the current requirement is. Compliance with jurisdictional licensing requirements for your auditor. Those licensing requirements haven't changed themselves, but there's just a section in the guide now that says your auditor needs to document their compliance with these licensing requirements. So I just wanted to point that out here in case that's something that you want to look at when you are deciding whether to hire or retain your auditor. You might want to ensure that they are in compliance with any auditing licensing requirements of the jurisdiction that they're in and you're in. Our team Mark had mentioned that we perform quality control reviews, and what that is looking at your auditor's audit documentation to see that it supports their audit, that they've got audit documentation to support the work that they performed. In this audit guide, we kind of detail what actions we could take if we find that the audit is deficient or not supported for some reason. Of course, we always give your auditor a chance to fix any issues that we identify, but if we have problems with them fixing those, there are certain actions that we could take, up to recommending that the department reject your audit report. So hopefully your auditor is doing quality work, and if we find that they haven't, hopefully they cooperate with us and do what they need to do to fix any deficient audit work. The engagement letter, this is the letter that you'll sign at the beginning of every engagement to confirm your understanding of what your auditor is going to be doing. We've added some required statements to that letter, so just make sure that you're reading that carefully before you sign off on that. And then we've also added some sections giving some additional guidance on these areas noted here. If you're a foreign school that happens to have an internal audit function, we've told your external auditor whether they can or can't use the work of your internal auditors, and basically it depends on the type of engagement being performed, and they would have to follow auditing standards that we point them to for that. Instructs your auditor how long to retain audit or attestation engagement documentation, and tells them how to identify any confidential commercial information that they have in their audit documentation. And then we also go over privacy rights of students and parents in here, and shows where schools are allowed to make student PII available to their auditor without the student or parent's consent for purposes of an audit. And last, under the general requirements, is how you determine the amount of direct loan funds received. So I had mentioned previously that the type of financial or compliance audit that you are going to be required to have, it depends on how much direct loan funds you've received during the fiscal year. So this is an important part in initial planning, is determining what that amount is. The prior guide had instructed you to request a list of loans certified by Ed, and then later instructions came that you should run an NSLDS report. This guide now instructs you to run, it's called the SAS Disbursement Detail on Demand report, and it's a COD report instead of an NSLDS report. We had heard that some schools complaining that their internal records weren't matching these NSLDS reports, and kind of traced that problem back to loan servicers that were posting payments received as loan cancellations, that kind of stuff. So the COD report should reconcile more closely with your school's internal records and be more reliable to use for this determination of what type of audit you need to receive. One thing to keep in mind, this report does have date range filters that you can enter your fiscal year, but it is award year specific. So if your award year if your fiscal year doesn't coincide with an award year, you'll have to run the report twice. So moving to the financial statement audit requirements, these aren't really new requirements if your auditor is following generally accepted auditing standards, but we choose to pull out some auditing standards that we feel are important that we want to point out to your auditor. So they're required to get representations from you, the school, and from your legal counsel for matters concerning the financial statement audit, so that's addressed. They need to consider fraud in the financial statements, including documenting how they've considered fraud, the possibility of fraud. And then it just describes how government auditing standards go kind of above and beyond generally accepted auditing standards for certain things like reporting on the engagement and presenting audit findings. A couple required financial statement disclosures that weren't addressed in the old audit guide, the first being the related party footnote. So this applies to all schools, including foreign. Their financial statements are required to include a detailed description of transactions with related entities, including the nature and amount of any transactions, financial or otherwise. We do have a example related party footnote in the audit guide that you can use and follow. And then, of course, the guide will tell your auditor what they need to do in regards to your related party footnote. Going to be examining it to determine whether it contains all required information. They're going to look at accounting records and interview school management to make sure that they have identified all related parties in the transactions with them. And then it's possible that you could have a finding in this area if you have not disclosed any related party transactions, or if you haven't disclosed them to a level of detail that the department requires. And the other required disclosure is the 90/10 revenue percentage footnote, but this applies only to for-profit foreign institutions. So for-profit foreign medical, veterinary, and nursing schools, this will apply to you. You have to disclose the percentage of revenues derived from Title IV funds in your financial statement footnotes with a numerator and a denominator, and identifying the buckets of revenue that go into that calculation. This is a calculation made by you, the school, and not your auditor. Your auditor has to audit it, so they can't make the calculation for you. They will be reviewing the accuracy of your calculation and its component parts using the procedures in the audit guide. And this is an area where they also could report an audit finding if there's any misstatement in your 90/10 footnote, or if they're not able to make a determination that you've complied. Perhaps you're not keeping adequate enough or detailed enough records to perform the calculation. So that's it for the financial statement changes. Going to move on to the compliance engagements. So first, for both types of engagement, standard and alternative, the guide requires management representations to be made. So again, like with the engagement letter at the beginning of the engagement, the management rep letter, you need to read that carefully because the representations that you're going to be making at the end of the engagement have changed. We no longer have sample management rep letters in the guide because those get outdated quickly. Instead, we just refer the auditor to the auditing or attestation standards that points out what those representations are. The next three bullets here, they apply just to the standard engagement. So there's a requirement that your auditor consider fraud in the compliance engagement. As part of that, they're going to be making inquiries of you, the school officials, to determine if you have any knowledge of actual suspected or alleged fraud. So that's going to be a question that will come up during the audit. The site visit requirement has changed a little, in that site visits to reportable locations where 50% or more of the program is offered. Site visits can be rotated with site visits every 2 years, except that the location where material administrative functions are performed has to be visited every year. When we talk about site visits, we are talking about physical in-person site visits. Virtual site visits at this point not allowed. And then guide changed requirements for reporting noncompliance identified by the school during a standard engagement. I mentioned previously that anything the auditor finds has to be identified as a finding in the report. But what about you as a school doing your own due diligence, identify that you've had noncompliance sometime throughout the year? You report that to your auditor. That used to have to be also reported as a finding. Now only material instances of non-compliance that you found yourself have to be reported as findings. So the guide has a change in sampling methodology. The required sample is now the same for the standard and alternative compliance engagements. Requires that the total student Title IV population be segregated into 2 universes, and then a random sample selected from each of those universes. And I'm going to go through that in detail on the next slide, but basically it's going to likely increase your sample, your auditor's sample size and the number of files that they're going to be reviewing. And then the guide also changed the confidence level requirements for projections. So this is when your auditor has identified material noncompliance. They have to project the error rate and question cost to the universe using a defined confidence level. It's the confidence level intervals that have changed for this. And then we wanted to point out here, same as before, but notification of the sample prior to on-site work is strictly prohibited by this guide. So if your auditor is giving you your sample, a month out from the site visit, that's not in compliance with this audit guide. So this is what the new sampling methodology looks like. These are the 2 universes that you'll be grouping your students into. The students who were enrolled, graduated, or on an approved leave of absence, and then the students who withdrew, dropped out, never began attendance, or were terminated during the year. Those are your 2 universes, and then from each of those, your auditor will select a random sample using this criteria here. So depending on which bucket each universe falls into, that's the number or percentage of student files that your auditor is going to be selecting to test. So for both samples, all randomly selected students are going to be tested for reporting, student eligibility, disbursements, and where appropriate, withdrawal calculations, or R2T4. This guide adds a little bit of background information on third-party servicers, including the department's definition of a servicer and the type of functions that an entity would perform that would make them a third-party servicer. It also incorporates guidance from Dear Colleague Letter Gen 1615 about limitations on third-party servicers that foreign institutions can contract with. Basically, can't contract with a servicer that is located outside of the U.S. or that is owned or operated by an individual who's not a U.S. citizen or national, or lawful permanent U.S. resident. And then the guide makes clear, though, that the school is responsible for compliance and the auditor is responsible for concluding on compliance, whether or not the school uses a third-party servicer. However, during a standard engagement, when a school uses a third-party servicer, there are some additional steps that your auditor has to take. So first, they have to get a good understanding of how the school uses a third-party servicer. That's going to involve reviewing your contract with your servicer and making sure that it has all of the requirements of a servicer contract and that it covers all of the services that are to be provided. And it's also going to involve your auditor interviewing your servicer management and school management to make sure that they have an understanding of who's doing what. And when you have a servicer, your auditor has to prepare and include with the compliance package a servicer information sheet that is specific to you, their client. If your auditor chooses to use the servicer's audit as evidence of the school's compliance, we point out that the auditing standards must be followed in that situation. To do that, that involves evaluating the servicer audit provides sufficient appropriate evidence of school's compliance. So now for some high-level things to keep in mind before we get into details of what's tested in each. First, the procedures are generally just written in more detail than in the prior audit guide. Although your auditors might be testing the same requirements as they were before, you'll probably notice that they're testing them in a different way, or that they're asking you different questions, or for different documentation, different reports to run. So you're probably going to notice that. And so considering this, just be prepared for more auditor time than in the past, especially in the first year or two of this audit guide. You know, more on-site time, more questions, more back and forth with you, so just be prepared for that. Okay, getting into what's actually going to be tested in the standard engagement we'll start with. So these are the compliance areas that are covered during the standard compliance attestation engagement. So that's for foreign schools that receive $500,000 or more in direct loans. Most of these are covered in the prior audit guide, maybe just labeled a little differently. You will notice, though, that G5 and cash management and closeout audits are new to this guide. In the next slides, we're going to go over each of these areas and what's changed in each of these areas, what's new to be tested. Under institutional eligibility, looking at whether additional locations are covered by legal authorization of the main campus or meet the definition of a foreign school on its own. So in addition to looking just at the e-card, they're going to look at whether any locations were added after the most recent certification or recertification. Looking at whether requirements for clinical training sites of eligible foreign graduate medical schools, foreign veterinary schools, and foreign nursing schools were met. So depending on the type of school, there's requirements for either applying and waiting for approval of these sites before dispersing aid versus possibly just notifying ed within 10 days. In addition to the program eligibility requirements that were tested previously, they're also going to be determining that the program is not ineligible due to being offered through telecommunications or correspondence, being provided by an entity that is not eligible or that is not offered in the U.S. So there's been a recent rule change on that we'll make sure that we address. And then if undergraduate programs offered at the school meet the clock to credit hour conversion provisions, unless the program meets one of two exceptions for those conversions. This guide now addresses foreign veterinary school accreditation. Prior guide just touched on foreign graduate medical school accreditation, so that's new here. Your auditor is going to determine if the school has provided any adjustments to compensation, profit sharing payments, commissions, bonuses, or other incentive payments based on the success in securing enrollments or the award of financial aid to students who receive Title IV, and that's called incentive compensation. That's this guide's the first time that it's being tested. If your school participates in the direct loan program under the zone alternative, the auditor will be determining if you complied with the requirements for that zone alternative. This is mostly going to involve additional representations from you, the school, and then the auditor working to corroborate those representations during the audit. There's a new section on bankruptcy and criminal activity, so they're going to be determining if the school or owner has filed for bankruptcy, or if owner or chief executive officer has pled or found guilty of a crime involving Title IV funds. Again, this is just going to be required more representations on your part about whether this applies to you or not, with your auditor corroborating that during the audit. Under reporting, there are some changes to how timeliness and accuracy of enrollment reporting is tested. Used to test both of those using what was called the Student Status Confirmation Report, and then pulling a sample from that. Your auditor now is going to ask you to run certain NSLDS reports to test the timeliness to make sure that you're responding to those roster files within 15 days. And then they're also going to be asking you for NSLDS enrollment timeline information for all the students in your sample, and that's how they're going to test the accuracy of that enrollment reporting. Guide now also requires the auditor to determine if foreign graduate medical school is accurately and completely reporting required test score and placements in U.S. residency programs to its accrediting authority on a timely basis. Under student eligibility, looking at professional judgment and dependency overrides, basically looking for adequate documentation of those and whether these type of decisions are made on a case-by-case basis. Going to be looking at students on approved leave of absences, specifically determining if they were approved under a policy that met ed requirements and that the student returned within the period granted. When determining whether loan amounts were proper, the auditor is now also looking at the 150% maximum eligibility period, where students who were first-time borrowers on or after July 1, 2013 may now receive direct subsidized loans for a period of time that exceeds 150% of the published length of the academic program. Also looking at PLUS loan eligibility, and that PLUS loan amount awarded didn't exceed students' cost of attendance less any other estimated financial assistance. Under disbursements, the first section in the guide under disbursements requires the auditor to determine if the school has defined its payment periods to disperse Title IV funds and that definition complies with ed requirements. The auditor now also has to determine if the school confirmed student eligibility, including the eligibility of transfer students prior to dispersing Title IV funds. So a school has to have a process for determining that a student is eligible. In addition to other timing requirements that were tested previously, the auditor now is also specifically looking at whether disbursements to first-time borrowers were not made until 30 days after first day of class. And also now looking for allowable charges, whether amounts credited to student ledgers were for current charges or prior year charges of not more than $200. Keeping with disbursements, they're also going to be looking at disbursement dates and amounts that are reported to COD. You'll have to access COD for them, probably print out the records, and they're going to compare disbursement dates and amounts to what's on the student account. When looking at notices to borrowers, the auditor is now also looking at whether the borrower was notified of their right to cancel and whether the school complied with any related requests for that and notified the borrower of any outcomes. If your school holds credit balances using a credit balance authorization, your auditor is now looking at the content of those authorizations and whether they contain all required information. And they're going to look to make sure the school has established a subsidiary ledger to identify the funds that are being held and whether they're maintaining cash at least equal to the amount of funds held. Under return of Title IV funds, there is the requirement that when direct loan funds are returned to ed, the foreign school has to return the original US dollar amount, even if the school incurs additional costs due to fluctuating exchange rates or fees. So there's now a procedure for the auditor to check that during their testing. If the school ultimately returned loan funds, the auditor is going to determine that appropriate adjustments were made to the student's direct loan disbursement data in COD and that the school notified the borrower in writing of the return. There's also a new section that requires the auditor to determine if the school is returning all direct loan funds when a student did not begin attendance, but direct loan funds were dispersed. Under the new G5 and cash management section, the auditor has to determine if the school is following required draw and disbursement procedures for its funding method. So to do that, they'll have to have you run the G5 external award activity report and then determine if net draws are traceable to the accounting records. And then they'll ask for draw details and select a sample of draws for further testing based on their funding method. So for schools on the advanced payment method, they're determining if the funds were dispersed within the 3 business days. For heightened cash monitoring, they're looking at whether funds were dispersed and credit balances were paid before funds were requested from Ed or before reimbursement is submitted to Ed for payment. Also going to be looking at direct loan monthly reconciliations that are required. The department sends out those monthly school account statements that are the department's official record of the school's cash and disbursement records. So we're looking to see that those reconciliations have been done and that any discrepancies are resolved. Also looking at depository accounts and excess interest. Foreign School is required to maintain direct loan funds in a depository account. Does not have to be interest bearing, but if it is, the school has to return all earnings in excess of $500. Under administrative requirements, your auditors are going to look at certain written procedures that schools are supposed to have covering responsibilities for approval, disbursement, and delivery of Title IV funds and preparation and submission of reports to education. They're going to be comparing those written procedures to how activities are actually performed at your school. You're going to look at whether you have implemented a direct loan quality assurance system as required by regulations. And finally, they're going to be reviewing schools' compliance with requirements implementing the Graham-Leach-Bliley Act, which requires financial institutions to meet certain requirements for safeguarding student financial aid information. The procedures for this section were debated on for years prior to it finally making it into the 2019 compliance supplement, which is kind of the audit guide for domestic nonprofit and private institutions. So it's in there now. You guys are lucky that it gets to be in this audit guide as well. There's just 3 procedures that are performed. Basically, your auditor is looking to see that you've designated an individual to coordinate the information security program, that you have performed a risk assessment on 3 areas, employee training, information systems, detecting, preventing, and responding to attacks, and then that you have documented a safeguard for each risk that you identified. And the closeout audit, this is applicable when a school loses eligibility or otherwise discontinues participation in the Title IV programs. They have to do a closeout audit, which is everything that I discussed previously, plus this section. The school has to notify the department and follow certain procedures detailed in the requirement, in the regulations, so your auditor is going to be checking those. If the school made any disbursements to satisfy unpaid commitments to students, your auditor has to look at those as well to make sure that they followed Ed requirements. So that's it for the standard engagement. This is the alternative engagement for schools receiving less than 500,000. So these are the areas that will be addressed in the alternative engagement. If you're familiar with the old guide, it's pretty similar, except the direct loan reconciliation and student information security sections were added to this guide. So again, in the next slides, we're going to go over the changes that were made to these. On enrollment and attendance, we understood that there was some confusion based on how the old guide was worded about enrollment and attendance. So procedures in this guide have been clarified to involve the auditor determining that students, one, enrolled on at least a half-time basis in a degree or certificate program, and that they began attending classes on at least a half-time basis during the period of enrollment, not that they maintained attendance throughout the year. Under direct loan amounts, same procedures as were tested previously, except the addition of the 150% maximum eligibility period that I mentioned earlier for the standard engagement. That will also be addressed in the alternative engagement as well now. Under enrollment reporting, again, the same changes I mentioned previously in the standard engagement. It's just that it's tested a different way now with different NSLDS reports. So your auditor is going to be requesting a different NSLDS report and enrollment timelines for the students in their sample. Direct loan monthly reconciliations will now be tested during the alternative compliance engagement. Same basic procedures as was in the standard engagement, where they're looking to see that the reconciliations are being done and resolving discrepancies. For return of Title IV funds, the major change here is that the auditor will be testing the accuracy of the return calculation and whether unearned funds were appropriately returned. In the prior guide, the auditor was not required to test the correctness of the calculation. They were only looking for determination of whether a refund was due and that the school calculated and made the return. So now they're looking at the accuracy of it. And under administration, auditor is again going to be looking at those required written procedures that a school should have, same as I talked about under the standard engagement. And on the alternative engagement, they're also going to be addressing the Gramm-Leach-Bliley Act, Student Information Security. Those same three procedures that were in the standard engagement are also in the alternative engagement. Okay, so with these changes that your auditor is going to be doing, what's going to look different? How is your report package going to look different? We'll talk about that a little bit. So in the guide, clarified that the all elements of the financial statement reporting package, the financial statements themselves, and the compliance reporting package have to be in English. All example reports that are included in the guide and that your auditor is going to use to develop their own audit reports have been updated to align with current auditing or attestation standards and the AICPA's illustrative examples. So you'll notice that there's some report wording changes, but it's giving the same basic information that it was previously. There's some minor details required, changes in what's required in title pages, like just making sure the OPE ID number and name of the school and fiscal year end are included on all title pages for financial and compliance. And regarding findings for both types of engagements, we've clarified that if the non-compliance causes any expenditure of federal funds to be questionable, the auditor has to identify the dollars as question costs. Your auditor was likely doing that before, but it wasn't super clear in the old audit guide that question costs should specifically be identified. On the standard compliance attestation engagement, we've removed the requirement for a separate report on internal control over compliance, though material weaknesses and significant deficiencies in internal control are still going to be reported if there are any in the report on compliance. Just not required to have two separate reports. If there are any student-specific findings for student eligibility, disbursements, and return to Title IV funds, your auditor has to complete a summary schedule, either A, B, or C, depending on which section it falls into. And there are example reports in the audit guide for your auditor to use. Basically, it's going to list out the students with the findings with a unique identifier, not the social security number or student or school number or anything like that. With a unique identifier for a student, and then identify what type of noncompliance that student had. And then for any findings reported, the auditor needs to present the views of responsible officials as well as the auditor's consideration of the school's comments if the school does not agree with the finding. You've always been required to do a corrective action plan if you've had findings, and that's attached at the end of your compliance engagement. This requirement is that kind of a summary of your comments are included with the actual finding itself. Keeping with the standard engagement, I talked about question costs before. During a standard engagement, if there is question costs, the auditor is required to have a recommendation related to those question costs. So they either need to say that you should do an appropriate refund or other adjustment, or that the school should confer with education officials about how to appropriately address those question costs. And then some minor changes to what's presented in the auditor information sheet and servicer information sheet, like contact information. We don't need fax numbers anymore, but we want emails for all the contact people, information if the school had stopped participating in the direct loan program, some information about that is required, and then updating the requirements or updating the compliance requirements that are listed in the servicer information sheet to coincide with the sections of the audit guide. For the alternative engagement, not much has changed for the reporting package other than the general changes that I mentioned earlier, except that we've added a requirement for an auditor information sheet for the alternative engagement. And basically that is just giving school and auditor contact information. You'll identify any accrediting agency that you have or third-party servicer, the location of the school's records, and if you had stopped participating in the direct loan program during the year, some additional questions that you'd have to answer. Okay, we made it. So if you have questions about the actual compliance requirements that I've talked about today or that you see when you review the guide once it's issued, please go to your FSA contact, the Foreign School Team. We are not experts in compliance. They'll be much better able to answer the questions for you about how to comply with these requirements that are being audited. If you have audit questions, that's where hopefully we can be of some assistance. So we have a team mailbox where we track questions, so it's best if you send your questions, your audit questions, to that mailbox listed there rather than emailing Mark or I directly. That email is also where you can direct your auditor to if they would like to obtain a copy of the guide and provide feedback on it before it's issued. So with that, we will take questions that you have. I think they'll come around with a microphone if you raise your hand. No way.
So on student eligibility, so I understand you're going to expand the selection criteria. There'll be more students selected based on the two universes. So with professional judgment and also confirming eligibility for transfer, with I guess transfer monitoring, is it if the students in the selection happen to have a professional judgment or happen to be a transfer student, then it will be checked?
So, good question. Professional judgment, there's no minimum sample size. Transfer students is one, I believe, one of the only ones that has a minimum requirement. So we're looking for the auditor to get at least 5 transfer students, if there are 5, or as many as there are in the school. And that's one of the only, in the proprietary school audit guide for domestic schools, we have some additional ones that don't apply to you. So like there was federal work study and that kind of stuff. But I believe transfer students is the only one that applies to foreign schools. So your auditor will select the basic sample, and then they'll make sure that they have 5 transfer students, or as many as you have if it's less than 5.
So it could be the 60 that's required as a minimum, but a max actually, and then more to meet the transfer requirements,
Yeah,
but not necessarily the PJ requirements.
right. That one doesn't have any additional requirement on minimum number of students in the sample to test.
Could you repeat the implementation timeline that you talked about at the very beginning?
Yeah, so when we made this presentation, we had it effective for 6/30/2020 fiscal year ends. So that would be audit reports that are due in December 2020. However, with some additional things that have come up recently, we're looking to push that to fiscal year ends 12/31/2020. So these would be audit reports that are due next June and thereafter. 2021, due 2021. Yeah, sorry. 12/31/2020 fiscal year ends, due in mid 2021.
You don't even want to complain about it?
No.
Hi. So a quick question in relation to the financial statement audit bit and the requirements on related party disclosures. If the required related party disclosures as part of the audit guide are more extensive or more rigorous than those under accounting standards in the home country, are you requiring another set of, or sort of amended set of financial statements with a related party note that adheres to those requirements that then needs auditing?
It's my understanding that the statute and regulations are more strict on the related party transaction footnote than some accounting standards require. I'm not sure though how that interacts with foreign standards. That might be a question that somebody on the foreign school team might be able to answer. I'm not sure.
Another question quickly in relation to the notification of sample prior to on-site work. Mm-hmm. Is there a sort of window whereby ahead of the on-site work the sample could be issued, or is it saying in the new guide we can't physically issue a sample until the day that we're supposed to be on-site doing that audit?
Yeah, we don't give a window, but I mean, day of, ideally, I don't think it would be a problem to do one day prior, 24 hours or something like that, but yeah.
What we're trying to avoid is manipulation of the records. If the sample's given out too far in advance, the school potentially has time to go over those records and be able to make sure everything's in there, and it kind of defeats the purpose of the sample. So you all are still in shock that you got the audit guide? Is that what it is?
All right, then look for it early next year.
Everybody, before you leave, technically the next session isn't supposed to start till 3:55, but I'm thinking we do not need an hour-long break this late in the day. Is 15 minutes okay? You're welcome. I'll see you in 15 minutes.